Hi everybody, my name is Mary Redmond. I'm talking right now about the New Zealand dollar US dollar pair. So this is one of my favorite pairs now for the short side, although it's still risky and I don't recommend to other people what they should do, but I like to talk about what I like to do here. For the New Zealand dollar, you can see that on a daily basis it's broken out of its upward trending path and the upward trend, although on a weekly chart it does still look like it may have some way to go before it breaks out of its true weekly channel. But the New Zealand dollar right now, in my opinion, is particularly vulnerable with the other commodity-based currencies just because of the macroeconomic outlook of a slower growth going forward and slower demand for commodities from both the US and China and the EU in the second half of 2011. So right now what we saw yesterday and what we may continue to see going forward is a real fear of what's going to happen in the market with this EU sovereign debt issue. And the focus in the financial markets over the last couple of days seems to have been on Greece and whether or not they're going to be receiving their next tranche of aid from the EU and the IMF, and whether or not the country is going to be willing to continue to go along with these austerity measures being imposed. So that raises a lot of fear in the financial markets, and the real fear among the central bankers, the monetary officials in the EU, is that it could cause some type of a real credit crunch and a spread up in the LIBOR rates and a freeze up of bank lending like we saw after the collapse of Lehman Brothers. And whether or not Greece gets their aid, and they probably will get some aid from the IMF even if there's a delay on the loan for the EU package, there's still some uncertainty in terms of whether or not these banks, which lent Greece the money, are going to be taking large write-offs. And it's not clear whether or not the EU bailout packages are going to be enough such that these banks won't be taking some losses. So that could have an impact on international bank lending going forward and on the LIBOR rates. That's the real fear in the market. And under these type of circumstances, a country like New Zealand would probably be very vulnerable, because the smaller the country is and the less diversified, the more vulnerable it is in the case of some type of an economic downturn or a spike up in credit rates. So in addition to what we saw, the focus really in the market in the last few days has been on the EU and on the European situation. But people weren't really paying attention to this, but we did also see some important news, in my opinion, for the Asian economies. The S&P downgraded the outlook on their China property developers to negative from stable. So the Chinese continue to tighten their credit conditions. They really want to control inflation. They want to prevent any type of a property bubble before it develops. So this is probably going to have a big impact on property prices going forward in China. It may have an impact on their total growth and the demand for commodities. We also saw there was a statement from Glencore, which is one of the larger mining companies and commodity companies. Glencore said that demand for commodities is slowing from China and the US, their most important consumers of raw materials. So the Chinese government's moves to curb inflation has dampened demand to an extent. And a lot of these companies are not really sure the extent to which it's going to continue to dampen prices going forward. Nobody knows exactly how much rate hikes or rate decreases are going to impact the economic growth. And there's no mathematical formula, you say, whereby, for example, the US Fed can say, well, we're going to lower interest rates by 25 basis points and we know that this is going to help the economy. Or the Chinese can say, well, we're going to increase rates by bank requirements by 50 basis points and this is going to slow the economy by 0.1%. There's always some uncertainty, and it appears that the Chinese would prefer to err on the side of slowing down growth to the extent to do anything they want to do to control inflation. So this is probably going to weigh heavily on the commodity currencies and the Asian currencies going forward, maybe as much as the EU situation is. And we're also seeing that the stock market is now in a downward trend. From my opinion, it's going to be a little bit longer before we can reestablish any type of an upward trend in the markets. we may have to see a pull to below the 1250 level in the S&P. We are seeing right now that it's in a pretty strong downward channel. And if it breaks below its 100-day moving average, which comes in below 1260, then we could see a further pullback in both the Dow and the S&P. So, in my opinion, what we want to do under those circumstances, you want to wait for a rally, which would be probably up to, it's possible we might see a rally up to the 1275 level or the 1280 level in the S&P. And you also want to see a pullback in the VIX. So over the last few days, we saw the VIX spike up to above the 20 level. Okay, so that indicates some real fear in the market and the beginning of what could be real capitulation. So usually, traditionally, what I like to do over the last few months, when we're in a bull market and you see a pull up in the VIX to a very high level or a spike up out of its Bollinger Bands, that's a time to buy. But if we're going into a bear market or even an intermediate term bear market, what you want to do is wait until, if you can, until the VIX pulls back a little bit before you short. So that's what I'm possibly going to be looking for. And of course, it seems like there's real fear in the market now, so we might not see a pullback in the VIX. It might continue to stay elevated for a while. And if you look at what's going on specifically in New Zealand, Governor Byoa didn't really give any indication of near-term rate hikes, and they did indicate that they're somewhat concerned about the strength in the New Zealand dollar. And New Zealand, of course, had another earthquake, so a combination of all of these factors is going to weigh on the New Zealand dollar and put it in a vulnerable position. So looking at the daily chart, we did see that it did break out of its upward trend, and when I look at it on different time frames in different charts, it made a bearish cross here with its twin RSIs, and it did break below its 10-day moving average. It didn't break below its 100-day moving average yet, or its 50-day moving average, but it's on the verge of possibly breaking below those. And if you zero in, you kind of look at it on an hourly chart here. We're seeing the US dollar there. If you kind of look at the New Zealand dollar on an hourly chart here, it looks like it's made a rounded top, and this looks a little bit like maybe a reverse cup and handle, and as if we've got another channel forming here. So if we did have a move up to the top of this channel, or if we did have a move up, say to the 80.25, possibly the 80.50 level, if you look at it on another channel, on a bigger time frame, you can see another channel here. And it's possible, depending on what happens in the overall markets, we might have a move up to the 81 level in the coming days, which I would prefer to short at, because I think we're going to be going into a downward trend there. So that's what I'm thinking about the New Zealand dollar, US dollar. It's in a particularly vulnerable position in these market environments, with everybody worried about what's going on with the EU and Greece, as well as the end of quantitative easing in the US. And then we've got the situation in Asia, when we may see some slowing in the growth in Asia. Not that it's going to go into any recession in China or anything like that, but when these commodity currencies are priced this high, any type of a slowdown could have a big impact. So that's going to be one of my favorites going forward to the short side, and I'm inclined to short on a big rally in the stock market or a big rally into the top of this particular pair's channel.